Welcome to MMO Gang Charlie. He's gonna make the MMO logo for me, which I showed in the last video and I'll show right here now. As you can see, he's getting money from doing graphic design. Now, if anyone needs any sort of graphic design, especially for Twitch players or streamers or YouTubers, then shout out Charlie, CB Graphics on Twitter, as you see on the right hand side here. Now, if you want your business or your profits to be featured in the next episode, just DM me on Instagram and show me your profits. And man, you get added to MMO Gang. Anyways, Charlie, welcome to MMO Gang. Check him out.
Hey, it's Poku Banks, baby, and if you're new to this channel, I'm Poku Banks. I'm a full-time uni student that loves talking about personal finance and entrepreneur and money in general. The aim is to go from a full-time uni student to a full-time entrepreneur, and you're on this journey with me. And today we're going to talk about the best saving accounts that you can apply for to keep your money working for you, to keep getting interest on your money, because cash is a depreciating asset. As time goes on, inflation occurs, therefore your cash has less buying power every year thereafter. And what you need to remember about saving is that, shout out to Robert Kiyosaki, it's not about how much money you make, it's about how much money you keep. Now, someone can be making 100k per year. If they're spending 100k per year, then that means they're not even saving anything. And this is why some people have high salaries yet they're still broke. They're living paycheck to paycheck. Why? Because they're over leveraged. They are a victim of lifestyle inflation. So as your income increases, your lifestyle expenses also increase, which is not the way to go about it. Okay, so quickly, let's go over why saving is important. One of the first reasons is simply financial security. Financial security will save you so much stress in the long run. Just knowing that you have money in your bank account just in case anything happens is just a good feeling to have. Having a financial cushion just waiting for you to use in emergencies, it'll keep you safe and stress-free, trust me. The second reason why saving is important is simply for emergencies, and a good example is the health pandemic we're in right now. I don't need to say much. This health pandemic is the exact reason why savings is important. If you don't understand that, then I feel sorry. Another reason why saving is very important is simply to avoid debt. So for some things that you can't afford, if you have the savings, you can go pay for that. So what people do when they can't afford something, they tend to go finance it. Now with financing, you are now paying interest on something that you could have bought for full price, but instead you're splitting up into little chunks. More time, when they're loaning money to you, they expect some money back in return, a profit. So this is the interest. Now there are a few things in life where you need to go to debt for, and it does make sense. For example, a mortgage. It's very hard to save up for a £500,000 house. But for the little things, one could argue that it's best to save and buy it outright. Okay, so now the first saving account that I recommend, and I feel like this is the most important one, is the lifetime ISA. I personally believe that this is the best saving account that anyone should take advantage of. Essentially, this is a saving account for 18 to 39-year-olds to invest up to £4,000 every year. Now, the good thing about this £4,000 every year, the government are willing to add a 25% bonus onto your £4,000. So if you were to put £4,000 into a lifetime ISA, the government add £1,000 on top of that, which is a 25% increase. So this means you're getting free money from the government. This 25% increase from the government is unbeaten. So that's why I say this is the most important one that you should focus on first, because this is the best one with the best benefits. So you should make sure that you reap all the rewards and take advantage of it. Now the lifetime ISA is for first time buyers, so basically anyone that's going to buy a house. If you bought a house in another country or you have an investment property, then you're ineligible for this bonus. So with the money that you put into your saving account, it can either be a lump sum, so you could put in £1,000, £4,000, whatever, or you could put in every month, so £250 every month. You add up slowly. It's up to you. Now the lifetime ISA can only be used either for property or for a pension when you're 60 years old. We'll go into that later. But now for property, the lifetime ISA is made for people to get a deposit for the first residential property that they'll own. Now you may only use this for any residential property up to £450,000. Alright, so essentially, if you're watching this video and you want to own a house one day, this is the best saving account that you should look out for. In reality, this is where you should be putting most of your money as it reaps the most rewards. Alright, but what's too good to be true will also come with some negatives. Let me go on to them. So the cons, firstly, this isn't really a con, but essentially you cannot withdraw any money for 12 months for a residential property deposit. So essentially, this is something you do way before you start house shopping. You shouldn't start house shopping then open a ISA. You need to be doing this years in advance to make the use of it. The second con is simply that you can only put into maximum £4,000 per year to be eligible for the bonus. You can put in more, but only £4,000 of that will be eligible for the bonus. So that means you're getting £1,000 every year. Now the third con is that your money is actually locked up, as in you can only take it out for property related things. So putting a deposit down towards a 450k property or below. Now if you are to withdraw your money and it's unproperty related, so it's not related to property, you just wanted it back, you now have to face a 25% withdrawal fee. So say if you've been putting money into your account every month, but then for some reason you wanted to take your money out and you needed it for something else, you will face a 25% withdrawal fee. So this can be a big chunk of what you put in. Now once you reach the age of 60, you can now access your funds freely, so you can do it for whatever you want. But again, to be honest, we're all aiming to get a property within our 20s or 30s. So it depends. I don't know if you'll be saving for that long, but that's a rule there. Now, the best saving accounts for having a lifetime asset is the Nottingham Building Society at the moment. Right now, they have an interest rate of 1.25% AER, annual equivalent rate. So while you're putting your money away every year, not only are you getting a 25% bonus added by the government, you're also getting a 1.25% interest rate, so your money is also growing, and this is helping beat inflation. This keeps the value of your money a lot larger than it would be if you would just leave it in an account with no interest. Now, the interest is paid yearly. The next best lifestyle that you can open is Moneybox, which has a 1% AER. This interest is also paid monthly, but to be honest, you don't really take your money out anytime soon anyway, and the only time you do take it out will be for deposits, so it doesn't really matter if it's yearly or monthly. I don't really see the point. Now, I believe that all these interest rates are variable, so they can change due to circumstances within the economy and whatnot. Okay, now that we're moving on to saving bank accounts, I found the best two that you should look into when saving your money. First is a nationwide Flex Direct. This is the bank account that allows you to save up to 1.5k per year, 1500, up to a 2% interest rate for 1 year. After the year is done, it will now switch to a 0.25% interest rate. Now bear in mind, this interest rate is fixed. So with a 2% interest rate of 1500, you are going to only make £29.70 in interest for the year. Now you guys may be thinking, Poku, this is pretty small money, but look, you're not doing anything, you're putting money in the bank account, and judging by the times we're in now, the health pandemic, the banks are lowering their interest rates. Look, we're not in a good time right now when it comes to interest rate. Now the thing with the Nationwide Flex Direct, you must be a new customer. You can't just be an existing customer. You need to be new to switch to the bank. That's how you get this interest rate. To be honest, after the rates drop to 0.25% after a year of getting a 2% fixed interest rate, I would recommend you guys to move to a different bank account which gives you a better interest rate, to be honest, because 0.25% is pennies, to be honest. Now furthermore, you can also apply for interest-free arranged overdraft for 1 year. So again, this means you could go into overdraft and not spend a penny on interest. Now when they say paying £1,000 a month, it does not mean you need to get £1,000 in income. It just needs to be paid into your account. So you can send yourself £500 from another account, send it back to yourself, send it again, and that's £1,000. You've met the threshold. Now if you don't like the minimum pay-in and you want another account, here's an alternative, the Virgin Money account. So now you earn 2.02% AER for 1 year up to £1,000. So this means in a year you get £20 2p for interest. Now, a good thing about this account, which is different to the Nationwide Flex Direct, is that there's no minimum pay-in, so you don't need to pay or send money in. There's no need for that inconvenience. Okay, so now let's move on to the regular savings accounts. Now, these aren't bank accounts that you get a physical card, but it's just a normal account that you see added online on your online banking. And the first one that I recommend is the HSB Regular Saver. You need to bank with HSBC before even getting access to this feature, the HSBC Regular Saver. So for example, you can't just apply for it from another bank, if you bank with Barclays or Nationwide. Now the annual equivalent rate for this bank account is 2.75%. Now for this regular saver, the minimum you save per month is £25 per month. Now the maximum you can save per month is £250. So in a year, the max you can save is £3,000. So the maximum interest being £44.69. This interest is paid annually and there's no withdrawals. Now for my people that aren't with HSBC or any HSBC related products, you can now look into the Coventry Building Society. This is a similar saving account with a 1.85% AER rate. But the only problem with this rate is that it's variable, so it could change as the year goes on. So now with this Coventry Building Society saving account, it's a lot more flexible than the HSBC one. So you can save between from £1 minimum per month to £500 as a maximum per month. So the max you can save in a year is £6,000, and the most amount of interest that you can make is £59.85. You don't need to be with any Coventry Building Society products. This is a brand new account you can just open up, it doesn't matter. So yeah, this is what I'll go for if you're not with HSBC. Now with the previous regular savings accounts, you can't really withdraw money as you wish. Now if you guys want easy access, I would recommend NSNI, which is the income bond. Now the minimum you can invest is £500 and the max is £1 million. So this is a very broad, easy access. Now with the interest rate is 1.16 AER, but it is also variable, so it depends on how the economy is moving. But since it's easy access, you can now withdraw and deposit money however you wish. If you just want to withdraw money, you just need to make sure you're withdrawing at least £500, and if you want to deposit money, you have to make sure you're depositing at least £500 for the income bond. Now if you want an even more flexible saving account, then just go for the Direct Saver. Now this has an interest rate of 1% per year. It's more flexible. The minimum you can invest is £1 and the max is £2 million. Again, the interest rate is variable, so this depends on how the economy is. But it's flexible. You can withdraw as little as you want or as much as you want. So now those are the best saving accounts that I found in this terrible economy during the health pandemic. If you want to know more, down below I've linked where I've got my sources from, so all the saving accounts, where I found them, the respective websites and whatnot. By the way, this is not financial advice, I'm not a financial advisor, this is just for entertainment purposes only. Now if you got to this point in the video, I appreciate it a lot, it really helps me. Now I just want you to comment to prove it, do you save, do you not save, what saving accounts do you use, how do you save? I have a lifetime ISA which is with HR, but after doing this video, I think I'm going to switch to the Nottingham Building Society, so we'll see. But yeah man, I hope you enjoyed it man. It's Poku Banks baby.